Today I want to have a look at another company in the technology sector that specializes in the creation of tiny semiconductors, and that company is Applied Materials. Over the past year they are up by almost 24%, but they dropped from their all-time high of $255 in July to their current trading price of $183.26. So today I want to figure out if Applied Materials will soon reach their new all-time high and if buying the company now will yield you great return in the near future. And as always, to figure this out, we will use our stock valuation spreadsheets where I have already plugged in the ticker AMAT. Now we can see that Applied Materials is a dividend company. They currently have a dividend yield of 0.87% with a dividend payout of $1.60 and a very nice low trailing free cash flow payout ratio of only 15.87%. And I can never stress this enough, a low trailing free cash flow payout ratio is extremely important, mainly for companies in the technology sector, as they do need to direct a lot of their free cash flow into growth and innovation. And with a low free cash flow payout ratio, Applied Materials can still direct 84% of their free cash flow into innovation. They can also buy back shares and pay off debt and raise their dividend into the future. Now, if we have a look at their market cap, we can see that is higher than their enterprise value, and that means that they are sitting on cash. They can pay off all their debt, and the difference between these two values, so 3 billion, would be the cash they are left sitting on. But now let's have a closer look at Applied Materials and jump to our fundamental 9-pillar analysis. And we can see that the company gets a rating of 9 out of 9, a very clean rating. Now, first of all, I want to have a look at their growth, as the company's revenue, free cash flow, and net income growth is arguably the most important thing, as when these three are growing, the company's value is probably growing as well. We can see that the revenue is growing at a rate of 10.24% every single year on average over the past 5 years, the free cash flow at 25.25%, and the net income at 16.65%. So double-digit and high double-digit growth, which is very nice. But let's have a closer look at these three metrics. We can see that the revenue grew from 17.2 billion in 2019 to 27.2 billion in 2023. If we have a look at the net income, that also grew from 3.6 billion in 2019 to 7.2 billion in 2023. So that's a 100% increase in the net income over the past 5 years. And finally, looking at the free cash flow, that increased from 3.4 billion in 2019 to 7.5 billion in 2023. So again, a 100% increase in the free cash flow. Now, something we can see is that Applied Materials free cash flow is actually higher than their net income. And that is something I love to see, as the free cash flow is essentially the blood of the company and is used for mostly everything, while the net income is mostly just a measuring metric. And that is also why we have a look at the free cash flow payout ratio and not the general payout ratio. Now, jumping back to the 9 pillars, we saw that the growth of the company is very nice. But now let's have a look at their PE ratio and their price to free cash flow over the past 5 years. We can see that both are sitting in the ranges we like to see. The free cash flow payout ratio sitting at only 12.43, which means that investors are underpaying for the company's free cash flow. Now let's have a closer look at these two pillars. First, the PE ratio. We can see that is currently sitting at 21.29, so a little higher than the 5-year average, and has been increasing at a rate of about 5% yearly over the past 5 years, which doesn't bother me that much. Now, looking at the free cash flow, the price to free cash flow, we can see that currently that is sitting at 20.41, so quite higher than the 5-year average. We can also see that the main jump happened this year when the price to free cash flow jumped from 13 to the current value, and on average has been growing at a rate of 16% yearly. So the price to free cash flow is something I will keep my eye on. Now, something I really love about this company is their very high consecutive dividend growth, sitting at 12.15%. And if we have a look at pillar number 8, we can see that indeed they have almost doubled their dividend since 2019. Now, to me, the very high consecutive dividend growth certainly makes up for the lower below average dividend yield of 0.87. The average is about 1.83. Now, before we continue, I just want to say these spreadsheets are very useful to both beginner and advanced investors. Whenever you see a company on the internet that interests you, you can simply jump to these spreadsheets, plug in the company's ticker, figure out its intrinsic value, and go through the 9-pillar analysis and understand whether it is worth researching this company further to possibly add it to your portfolio, or whether the company is simply not worth your time. Now, jumping back to the valuation, we can also see that they have a very high 5-year profit margin of 46.57%, which is well in the range we like to see. They have also been decreasing their shares outstanding at a rate of 2% every single year over the past 5 years. We can have a closer look at this. We can see that indeed in 2019 they were sitting at about 923 million shares, and currently they're sitting at only 834 million shares. So that's a big decrease. And when the shares outstanding are decreasing, it essentially means that you as an investor own a larger percentage of that company, and therefore the value of your shares go up. Now, for the final pillar, we have a look at the long-term liabilities over the 5-year free cash flow negative dividends to be sitting below 5. We can see that for applied materials, this is sitting at 0.25. And if we have a closer look, this metric essentially tells you whether the company generates enough free cash flow to pay off all their long-term liabilities while sustaining their dividend. And we can see that applied materials really won't have an issue with doing this. We can also see that they have been actually decreasing their long-term liabilities over the past 5 years at a very low rate of 0.38%, which isn't that much, but it is better than if they were increasing their long-term liabilities. So overall, everything is looking very nice for applied materials. So now let's calculate its intrinsic value, first using the Graham's formula revised. And here we will predict the 5-year earnings growth estimate at 11.47%. And by taking this prediction and all the other values, we get an intrinsic value of $183.12, which is basically spot on with the current trading price. But we still have more valuation models to go through. So let's jump to the discounted cash flow model, where we plug in the free cash flow over the past 5 years and calculate an average growth rate of 25.25%. Now into the future, I calculate a growth rate of 24.3% and plug in a discount rate at 11.4%, very close to the company's WACC, and get an intrinsic value of $274.92, which is quite higher than the current trading price. Now moving to the multiples valuation, where we compare AMAT to 2 of its competitors. Now, I did valuation videos for both of these companies in the past week, so you can check them out at the end of the video. We take these companies' stock prices and divide by their earnings per share to get their PE ratios, and we can already see that these PE ratios are higher than the PE ratio of applied materials. So when we average them out and multiply them with the earnings per share of AMAT, we get an intrinsic value of $274, which is again higher than the current trading price. And finally, moving to the dividend discount model, where we plug in a projected growth rate of 10.67% and get an intrinsic value of $216.24. Now moving to the ultimate valuation, where we average out the 4 valuation models and get an ultimate intrinsic value of $237, which is about 30% higher than the current trading price. And if I plug in a margin of safety of 20%, we get an acceptable buy price at $189.67. So overall, applied materials is currently trading below its intrinsic value, and all their 9 pillars are sitting in the green. And with the AI boom and the tech stock boom, I really believe that applied materials will go up in price over the next few years. And with that, I hope that you enjoyed the video. Make sure to leave a like and subscribe, as it really helps me out.